Alrighty, hi everyone. Thank you so much for joining for another virtual office hours that we're hosting with Alice, Lisa Wang, and PepsiCo. We're so happy to have everyone, and to our expert mentor for today, Lisa Dolan. Just want to welcome everyone, get everybody nice and settled, grab your notepad, grab your cup of coffee or lunch, depending on where you are. And we're basically just going to go through a great conversation with Lisa. And these live sessions are brought to you by Alice. We're a free technology that's here to help all entrepreneurs launch and scale their businesses. And in addition, with PepsiCo, our great partners who've launched a wonderful initiative supporting female founders across the entrepreneurship space and within food and bev, called the WomanMade initiative. And I'm Anna. I lead partnerships for Alice. And normally Sandra is the one that you all are hearing from. I'm filling in for her today. We also have Lisa Wang from SheWorx in Republic, who typically will run these sessions, and hopefully we're going to have her join and be with us soon. If not, we're just going to have a great conversation between myself and Lisa. And now everybody can join the WomanMade community on Alice. We'll share the link there if you're not already a member. But I would love to introduce Lisa Dolan. She is an incredible woman, and we are really gracious for her time. I'll let her tell you where she is right now and how she is very nicely taking the time away from a conference right now to be with us, which we really appreciate. But today we're going to be talking about the best fundraising strategies for early stage consumer companies. And Lisa is a principal at Link Ventures, which is all about disruptive internet technology companies and using big data, and talking about how that can help you differentiate, scale, and become profitable. And she will tell you much, much more about her awesome expertise. So as we go through, any questions you have, feel free to throw them into the chat portion or into the Q&A. We'll make sure to keep up with them as we go along. So don't be shy and feel free to ask any questions. We're here to help support you all. So all questions are welcome. And we're excited to get started. So Lisa, thank you so much for joining us. Would love for you to tell us a little bit about yourself and about Link Ventures. I think you're on mute. Let's see.
Okay, can you hear me okay?
Yes, we can.
Okay, so I think I'm gonna just do the normal
okay, great, that's computer.
Totally. So my name is Lisa Dolan, and I'm a principal with Link Ventures, just starting now. We are a VC firm, actually established in 2006, and we invest in consumer internet technology companies that leverage our data that is a part of our partnering incubator. It's consumer insights data, and ultimately we help our companies really target, differentiate, and scale, and be able to acquire customers more cheaply than the alternatives and the competitors in the space. So we invest $3 to $5 million checks, but as someone who is a consumer internet entrepreneur, I understand that actually even equal to the capital our data that really allows people to be able to target is as valuable, if not more, than the capital that we do invest in basically Series A companies. And so we just closed a $100 million fund, so it's very exciting. Our fund one was from our founders' family office capital, and we had some really great wins, such as EverQuote, which actually went public, and our incubator is actually on the list of one of the top 10 places to work, and so that's a little bit about us. My background is I started a men's shopping platform called Savile Row Society, and that's actually when I first learned of SheWorx back in the day, so to speak. And this was in 2012. I was working at JP Morgan in the investment bank, and I grew up here in New York. Was a tomboy, hated shopping, and the idea was to have a inventory-less platform where we had stylists on the platform that suggested clothing to guys and did not enjoy shopping. And so that business model is common today, but back when I was negotiating with brands to A, give us margin, and B, drop ship, and that was not something that they were built for at that point. Now it's a completely different world, completely different model, but back in 2012 was when I was coming up with the idea, and so that's a little bit about my business. And then where we found value was actually in the data of what we suggested. So product recommendations, and then also customer service. And so I worked with a pre-seed retail tech fund to build a bot for low-level service inquiries, and then also a product recommendation engine for Shopify. And then I recently am just joining Link Ventures and getting back to now on the other side of investing in consumer internet companies. Previously worked with a family office and led business development for our research analysis arm. So that's a little bit about me. I live in New York, but our office is in Cambridge, and I go to California all the time. So I'm sort of all over the place in terms of where I work and live.
Well, wonderful. Thank you so much. And next time you're in California, we'll have to hang out.
Absolutely.
Well, my goodness, you clearly have so much experience on kind of all sides of the conversation around being an entrepreneur, being an investor in terms of growing a company and helping companies grow. So I'm really excited to dig in to a lot of these different elements. And I have a feeling we're going to end up talking about data a lot because we have a lot of conversations around inclusive data at Alice as well. So I'm curious, just even stepping back, and for the entrepreneurs we have listening in who are probably interested in fundraising, whether they're just getting started or they're trying to learn about if it's time for them. So really that early stage point. I'm curious just in terms of your approach and what you see, and really at Link Ventures, kind of what is y'all's approach? What stage do you typically look at? If you could just start with that, that'd be great.
Yeah, absolutely. So we invest in what, if we're going to talk about the letter is the Series A stage, but really start speaking with entrepreneurs when they're in the seed stage. And so seed to Series A, $3 to $5 million, and we take a sizable percentage in that we're hands-on to enable them to acquire customers more cheaply, give them the data tools that are proprietary and really only offered to our incubating companies, our Kogo labs, and then we're offering it to this portfolio as well. So we do focus on the Series A stage. When we're looking at a company, we can go into the KPIs, but it's not only about their stage, but really are they growing and are they having momentum? And so we're looking at Series A seed, but really having that growth and showing that momentum is important.
Okay, great, thank you. And I'm curious just to drill down on that a little bit. In understanding that whether it's seed or Series A, that it's really that growth, that momentum, that kind of demonstration of traction that you all are looking for. I'm curious, what are the actual and specific metrics that you guys are looking for and say, okay, this really demonstrates and can clearly show that growth is happening in a metric-driven way? Yeah,
absolutely. So I think that just generally, and I can speak to this, really having an understanding of what the key business drivers are of your business is really important, so that we understand that you really have a clear grasp of what makes your business tick. But that said, also, I would sort of give yourself a break in that at different points of your development, you should be focused on different things. And so if you're pre-product market fit, which is not necessarily where we would invest, but when we start conversations, thinking about qualitative feedback, customer interviews, have you gotten awareness, have you shown stickiness, and then when you move into so basically you can't be worried about your lifetime value when you're at the product market fit stage. So really understanding where you are and seeing how you can grow and and iterate on those key metrics as you grow. So then when you get into the product market fit stage, thinking about, which is really important for our businesses, is monthly recurring revenue, growth in, it depends on which business you're in, but perhaps growth in monthly active users, renewals, having an understanding of churn, customer satisfaction, and then also at that stage, and everyone sort of knows that the key, so the key metrics to focus on, but lifetime value and CAC are important, but also that ratio of CAC to lifetime value. You'll be asked, over and over again. And one of the reasons it's so important is it really gives you understanding of the sustainability of a company. And when we're investing in a company, we want to turn X into 10X. And so understanding that that is sustainable is something that you can do with really getting that ratio understood. And then also in the early stages, this may not be a metric, but is something for you to do an exercise, is really developing your cohorts. And so what that means is understanding, okay, how did you market the cohort that you, the customer cohort that you onboarded in January, and what are the common traits of that cohort? What is their churn like? What is their average order size like? What was their cost per acquisition like? And really being able to understand the different cohorts is a really good exercise to really get into the weeds of how to tweak and optimize your business. And so building a cohort analysis, I think, is important. And then with that cohort analysis, you can understand what is the cost of acquisition recovery time of any given cohort. And I find that also to be really, really key. So basically what I mean by recovery time is how many months do you have to take to recover that original cost of acquisition.
That's great. Thank you. There's so much great insight in everything that you just shared. So thank you. And I think it's really helpful because we have a lot of companies, the idea in really, really early stages of their business that we work with day in, day out, and understanding how you really demonstrate that traction when you might not have month over month recurring revenue yet, but really kind of earlier metrics like feedback from your customers and interviews and kind of how you can demonstrate that stickiness, I think is really valuable. And there are ways that you still can do that. So kind of not putting the chicken before the egg a little, and making sure that you really have that before product market fit, which we know is a big challenge across the boards. And I love also your thoughts on the cohort analysis. I think that's really helpful insight as well. And I'm curious if you see if that often leads companies that you're looking at into establishing really clear user or customer personas. And if you see that, especially within your marketing and data-driven approach, if you think that is a useful tool within the cohort analysis, or how you all approach that.
Yeah, absolutely. And I think that it really allows you to understand who your first movers are. And to your point, if you're understanding that the Facebook ads that you're doing to, let's make an example of a person, the Facebook ads that you're doing to recent USC grads have been really successful, and your business is a platform that connects universities to people. Perhaps it's like a content platform where you're educating prospective students, and seeing that, okay, that person that's interested in USC is in that location, had this willingness to spend, was in this demographic, 25-year-old woman. That was a really successful cohort. That was a really successful month. Okay, well then let's drill down into that, and let's add more more to that next month. And it's actually very much like, if you think about the stock market, sometimes when you're doing bids of Google AdWords or Facebook, that's what you should be really thinking, is like optimizing trading, and really trying to tweak and see who is the best customer to get, similar to trading a stock. So I think that's very key. And then sort of separate from cohort analysis, I do want to just not gloss over is runway, is having a keen focus on runway. I think that is absolutely critical, and something that you really can't discount, because at the end of the day, you need to pay your team, and so that's something that I definitely wouldn't discount, no pun intended. So
no, that's a fair point. And I mean, all of us is for naught if you can't keep the lights on and pay your employees or yourself. So totally fair on runway.
Yeah.
I'm curious too. I mean, we're talking about runway and cohort analysis and really a lot of these exciting elements and challenges to tackle. I'm curious if you see other challenges that really are kind of key to surpassing in this early stage. And so what do you see typically coming up that maybe even you wish, as people were pitching to you, they had already kind of addressed this challenge, or they were demonstrating some progress around areas? Any insights we all can learn from would be great.
Yeah, absolutely. So one is really understanding how your conversion rate is. I think that reveals a lot about the health of the business, and your ability to sell to customers something that they want. And actually, Sam Altman said this once in a talk. He said, ultimately, you need to sell something that people want. And it sounds so simple, but it really is. And conversion rate, I think, picks up on that. So your ability for customers and their desire to buy your product is shown through the conversion rate, and it depends on which business you are in, whether users is your main focus in terms of conversion rate, or what conversion rate is in the process of becoming a paying customer is different for every business. But really tracking conversion rate over time, and running experiments to constantly optimize it, I think is really key, and that is something that you should start with early and continue throughout the life of the business. And so, whether you're a marketplace business where you're focused on gross merchandise volume, GMV, or if you're an app business and you're focused on monthly active users, your conversion rate will be different. But really focusing on that, I think, is really key.
Yeah, thank you. That's also helpful. I'm curious too, in terms of how people pitch and present their companies to you, what's that balance of focusing on conversion rate and CPA and really kind of the nitty-gritty data-driven metrics that are showing how they're gaining traction and showing how they're really selling and creating that customer traction, in addition to the narrative around kind of the origins of the company, part of the team. We often have a lot of questions around pitch decks. Of course, there's a million different ways to put those together, and each VC is different in terms of what they like to see. So I'm curious, just from your perspective, how do you strike that balance, and what do you think is the best way forward and really kind of hitting it home with an investor in that initial pitch deck?
So I think that being able to show a history of what you've tried, and where you've found opportunity. So that shows to the investor that you've been thoughtful, and you've been data driven, you focused on analytics, and then aside from the analytics, at the beginning, you have found that there are first movers that want your business. So that doesn't even need it. That's clear. But then showing improvement and optimizing it and then showing that over a certain amount of time, I think is really key. And then something that's very important to me is gross margins. And the reason is that it shows that there's ability to reinvest in the company, and there's potentially a longer runway to invest in other areas of the business. And so gross margins is important, but I wouldn't say that that's I think that's important for down the line, not early on. But you should know that as an investor, they're looking for gross margin that will be strong at a time of exit. And then also retention, I think, is really sort of dovetailing to being really in touch with optimizing. Retention, I think, is really key. So having a retaining customers is very, very key. And then as I said, the payback period of your cost per acquiring customer is also important. But then also sort of the other side of the spectrum, if you look at some of the high growth companies, where you see a lot of success is ones that have a great culture. And so building a team, and perhaps we'll discuss this, but building a team early on that you want to ultimately really invest in and reinvest in, and think of yourself sort of similar to how an investor would determine whether you're an entrepreneur to invest in, is how I would also hire the early stage team that you're planning on hiring.
Thank you. There's so many great insight nuggets in that. I want to kind of drill down on one thing you said about showing the history and the improvement over time. That's some really good insight that I haven't heard a lot from our investor experts before. And I really like that insight, because I think sometimes we might shy away from showing progress, admitting that we weren't always as fancy and wonderful as we are now, especially in terms of how that can be a little scary, but also really demonstrating that you've iterated, you've grown, you've evolved with feedback and over time, versus acting like it never existed. So I thought that was really great insight and a really solid perspective.
Yeah, I think that being intellectually honest with yourself is really important, and knowing that, of course, you didn't know everything at day one, and being open to that, and really being open to learning is important to be. And I think that showing that history is a way to show that you're coachable, and you are you're humble, and you understand that you have a lot to learn, and there's going to be a lot more to learn down the road. So showing that you have learned is a good data point for us to understand that you will learn more and you know how to learn.
That's a very fair point.
Yeah.
And I'm curious, kind of in that vein of kind of continuing to learn. A lot of what we're talking about with kind of the analytics that are focusing on not just customer acquisition but retention, like you were just mentioning. Kind of how it's a big and tough nut to crack, right? Especially in the early days. So I'm curious, from how you see now with within a VC, and then previously with all of your experience with other businesses that you've been with, kind of how do we find the acquisition tactics and then retention right behind that? Because if you acquire customers and they leave and they never come back, you're kind of left like a sitting duck. So I'm curious about how you could give some advice on really specifically and really tactfully how to tackle the big old acquisition and retention challenges in the early days.
Yeah, absolutely. So I would say not trying to put a peg into a round hole, as they say, meaning you clearly want to get as many customers as you can in the early days, but really finding those product lovers, those people who really, really love your product or service, and focusing on them versus trying to get people that are perhaps on the fringe and not product lovers, and getting a wider net. Clearly you're going to have higher churn because one, you have finite resources, so you can't really provide that customer service that is required, and then B, you're also targeting people that are not your product or service lovers. And so really focusing on those first movers and those champions, and having them then do some work for you and share with their like-minded people and friends, and then having the resources to focus on customer service. And I'm the biggest customer service advocate, and I think that really having an experience where you're, as they say, delighting customers and focusing on fewer versus many that may not be lovers will be a way for you to improve retention.
Okay, great. I'm going to come back to surprise and delight and customer success in a little bit, because I have a feeling you've got a lot to share about that. But I'm also curious, knowing that hiring, and you mentioned that having that A team with you, and having that be a part of your deck, I'm curious for you to talk a little bit about that in terms of what it is you like to see, and what are maybe even some red flags around where a CEO and a founder is within hiring, within Series A, because we've definitely heard from a lot of entrepreneurs, they often don't know if they haven't yet hired that team, if they have an idea, just how you would give advice on, depending on where you are, how you should start that conversation so that investors know you're thinking about it, depending on kind of regardless of where you are.
Yeah, so I think that, team is something that people talk about a lot, but I'll talk about it personally, so it's not trite. I think that if there's something that I've learned is that really focusing on who you hire early is one of the most important things. And I think that there's a couple questions: is who is both has the functional expertise and also the industry experience to be on the team. So that's one point. Second point is really the fit. And as someone who had a men's shopping business, fit is the most important thing about everything. And similarly with a team. And I think that having people be the right fit is key. And just like understanding their background, what they are looking for in a startup. There's a lot of people that are interested in working at startups, but what is their goals for their career? How does that dovetail to the company? And so functional and industry experience, are they a right fit with you and the team? And then actually, do they really, really love what you're building? And can they sell, essentially? And as I sort of was alluding to before, I think that actually an interesting way for you to think about how you're building your team would be similarly to how an investor would be vetting you as the founder, entrepreneur of the business. In that, if you, I have done some sailing in my day, and before you go out for a sale, you need to make certain that everything is fastened, and there can't be anything lying around. And so similarly, that's how I would treat your diligence of your team, is just really getting to know everything about the person, and knowing that you are, no pun intended and not to be corny, but you are going to be going on a stormy, you're going to be going on a stormy ride, and there's going to be ups and downs, and you need to make certain that the team will be there through the ups and downs. And so really doing that check, whether they're preference checks or what have you. But I think that that's really, really important. And that's how I think of as the investor. And I think that as a company leader and operator, that's also how you want to build your early team and really be really fastidious about the process.
That is great insight. Thank you so much for sharing. I'm curious, in kind of a similar way, going back down memory lane of lessons learned in hiring your team. Those are such great insights. I'm curious, applying that to fundraising and maybe even selling, kind of what are some, now sitting where you are now, looking back, what are some areas where you can say, I wish I knew this then, or I wish somebody had told me that?
Yeah.
You know, just any kind of, I think it's interesting with where you are now, and especially being the one on the other side of the table, just what insights you have of, I really wish somebody had given me this advice way back when.
Yeah. So I really wish, I think the team is important. I think that really having the right fit and the right team, and that is number one. So that's what I would say. And I also, touched on, I touched on culture, because some of the, clear growth companies have really great culture. And so I think that that's not something that I think we do have very good culture. So actually, maybe team. So I'm actually, should I tell them where I am?
Yes, I love it. It's very real. So I think you should definitely share.
Well, let me just finish my thought. But
okay.
I think that focusing on team and culture is definitely important very early on, and that's something that I would highlight. And the masseuse was just telling me, so that I have to let's go shortly. I know we have our time here, but I'm actually at a conference in Brooklyn, Founders Forum conference, and I'm actually right now in a treatment room. I wanted a quiet place to speak, and they said, come and check out the spa. So this is advertising for the Brooklyn Hotel, One Brooklyn Hotel spa is beautiful. It's very, very cool hotel, and also a beautiful spa.
That is amazing. It doesn't get any more real.
And that's an entrepreneurial thing too. Unfortunately, but so.
No, you're awesome. Thank you for being willing to sit on probably some uncomfortable bamboo chair in a spa to talk with us. So thank you. Now I can see we've got a few questions coming in through the Q&A. So anyone listening, feel free to throw us your questions in either the chat or the Q&A. And I'm curious, before we get into those questions, just looking at the consumer tech space, there's a lot of really exciting things going on, whether, like you said, that's within the marketplace or platforms, and a lot B2B, B2B2C. And I'm curious, just in terms of differentiating yourself in that space, especially as it's going to grow, if you have any insight on what are some key differentiating factors, and whether that's how you share your culture or demonstrate, your traction, like you were speaking about earlier. Curious, specifically thinking about differentiating and kind of standing out within the space. What's some good advice you'd have?
Differentiating in terms of your culture, or differentiating in terms of the product or service that you're providing? So
I think both would be helpful, but definitely within your product or service, how can you make sure that if you have competitors out there within the space, how do you stand out?
Yeah, absolutely. So really focusing on, what you do best. And I think, not doing 1,000 things, but really knowing that you, especially in the early days, the one thing that, you're constrained is your resources. And so, so really being innovative in just doing what you do best, whether that be customer service or your product is it's cookies, and you make the best damn cookies, such as Lavaz in New York. I was actually just talking to someone who is investing in them. And so really just being true to yourself and just knowing what you can do and what you cannot do, I think will really enable you to be differentiated. So to that point, when you're speaking to investors, I know I've been there, I've gone through, like, this is the competitive space, and this is everyone in the space, and what is everyone else doing? And you need to know that, so you are differentiated. But also that also can be tricky, in that you want to also just do what you do best, and not try to hit each base so that you meet that given differentiator. But really doing what you do best and getting those customers on that are your product lovers will differentiate you. And that will, sort of talking about culture, that will also dovetail to really building a differentiated culture. So I think Airbnb is one that has a great culture. I'm just going to sort of drill down on Airbnb. And so they actually went door to door. They took photos of apartments in the early days, and they really value their early customers. And they did that on a shoestring. And so really understanding what is most important to your business is key. And I think that they have now established themselves as having a really awesome culture.
I totally agree. We're big fans of Airbnb. So absolutely agree, especially the early days. Some of their stories about how they were the ones going and doing, and like you said, taking pictures of the apartments is a really cool part of their story. And I think really indicative of how they've continued to build their company. But I love your insight there about really kind of, it sounds like just keeping focused, doing what you do best. Like if your company is all about making the best damn cookie there is, really owning that and focusing on your cookie, and maybe not the sprinkles and all the other things that you can get distracted by. And I think a lot of founders face that, especially when opportunity comes knocking, where it could be maybe something, that you could pivot to slightly or tangentially related. So I think that advice on really staying focused and really knowing what you are good at and nobody can do better is really solid advice. So thank you for sharing that.
Yeah, absolutely. I think that, and Zappos is, another one I think that is known for its culture, perhaps a little bit eccentric culture, as Tony Hsieh. I think it's known that he sleeps in like the trailer park, whereas the coders and the entrepreneurs, are in the beautiful building nearby. But he too, has an amazing culture of customer service. And if he, followed what the others were doing, he would not have, call center employees that are encouraged to speak without a script, and he would have a limit on call times, which is sort of customary. So, he also has this thing that I think it's there's like a quitting bonus. So like after your training, it'll give people a bonus if they want to leave, and that gets people that are really product lovers and really love the business. And so those sort of quirky things where you just know what you do best, and saying this is me, take it or leave it, I think is key for product service, and then ultimately sort of dovetails into your culture.
That's great. Those are really good, solid examples. And I definitely think that there's opportunity, and we should probably have an entire AMA with you just on customer success, and really pulling from your experience and your past with that, and using Zappos and Airbnb as examples. So everyone, we'll hold each other, Lisa and I, to that, and we'll figure out a way to have more of a conversation around that topic, because I have a feeling you've got a lot of insight to offer. So I'd love to do that. And now I know we've
Yeah,
got
I'd
some
love to.
questions, so I want to make sure we get time for those. So one of our attendees has asked, definitely along this theme of hiring and team being so important, what do you think are the most critical hires as you grow from seed to Series A?
Yeah. So it really depends on the business you're in. And so, if you're in a business that, I'll just, use some examples of businesses that I recently have seen. And a business that is building an app for listening to messages and emails while you're driving. So that's a big pain point is people should not be texting or emailing while they're driving, and so the application reads aloud for text and emails. And so what one of their key hires is having a salesperson who has the sales channel relationships and that Rolodex, because what is really important for them is to go to market with large truckers and large businesses, and so that is an example with that type of business. And so with different businesses, you need to understand what do you need at that given time and what is missing, and that would be product or sales, engineering, and understanding that each person that you're bringing aboard is sort of needs to fit, and so making certain that your CTO has a really good communicative relationship with your salesperson and your customer success person. So I would say just high level, it really depends on what business you are and what stage you are in, but I think that customer service is so important, but anyone can, really do that who really loves the product. In my mind, anyone can do customer service as long as you love the product and are empathetic. And empathy is the most important thing. So, so I would say, if you're a tech business, having a strong in-house tech co-founder, or not a co-founder, an early hire who's really invested in the business, and then product and sales, but making certain that also each person has a good fit, and what that really means is has a good communication relationship. And so in those early days, like any relationship, communication is so important, and there's going to be a lot of conversations that are going to be difficult. So the customer doesn't like this feature. There was there's an issue with this experience, and being able to have a team that is all coachable, and so and also all can communicate, is really important for you to quickly iterate. So so I'd say it's not only having those key functions, but also having people that can communicate together, and move quickly.
That's such great advice. Thank you. I think that's a really solid point to hit on, that it's not just about the function and the role. It's really also about how those roles interact and how they communicate. So that's very good advice. And the balance between product and sales within any technology company is a really important one to strike. So thank you. I think that's really good insight. We have a few questions specifically on pitching. And so we've got some on, how do I make my pitch deck stand out? How long should it be? I think it's pretty literal there in length, knowing that there's a lot to communicate in a short amount of time and in one presentation. And then how to present your timeline.
Yeah. Okay. So in terms of length, I think that 12 pages is good, and then having a separate deck, you could read 10 to 12 pages, but having a separate deck that is for follow-on conversations where you're going to dig into some certain if you're going to dig into market, because you're going to have a lot, or you're going to dig into your metrics on CAC to customer lifetime value, and you're going to have the back data behind that. And I think that having just a short deck, you can learn a lot from an investor, and especially as investors are looking at many, many decks. And then for that second conversation and for follow-up questions, then have easy decks or just one-pagers or Excels, what have you, to substantiate the questions that and answers that you're going to have. And there's going to be a lot of them. And so I think having that collateral ready to go is important, and that will be, what will be the longer deck, if you will, and more information, but not inundating the first deck with a lot of information, I think is key. And similar to any relationship, this is a very long-term relationship between an investor and a startup. So think of it as a first date. You're not going to give them the whole story on the first date. You're just going to give them the first high level information about you and see if they're interested or not. And then you'll delve in deeper and deeper. And then in terms of timeline, I love timelines because it shows you what are you going to use our funds for, and that's ultimately what we want to know, is that what you've done to date, you're growing, you're building momentum, so that history before, and then, okay, this is when the capital is deployed, and where are you going to allocate it to, and then what's that next milestone. And so what's really important about a timeline and financial projections too, is being able to understand what you're going to get to with this money, and basically what milestone are you going to get to, and what will be your cash burn and your enterprise value at that next milestone. And that next milestone may be when you're next going to raise capital. And so at the next time when you're going to raise capital, then we have to understand, okay, what valuation you'll be at, and what will be your cash accumulation or cash burn. And so constantly having that tracked is something that is really important for an investor to know it when you're writing that check. So that's something that I usually feel like you need to work through with the investor, and then very few entrepreneurs will have that on your first conversation. But once you start having serious conversations with the investor, understanding how much they're going to allocate, understanding where they're going to help you, that's when you can really hone out your timeline. So
that's great. Thank you. Now I think we've got time for maybe 2 more questions. And thank you so much again. You've offered so much great insight. And I want to remind everybody that the recording of this chit chat with Lisa will be available in the WomanMade community. So you can come back through and take notes and apply some of the learnings that Lisa, you've been so kind to share. Okay, so kind of on a similar theme, you've touched on this a little bit about certainly the fit for a founder for you within a VC, like you've brought up coachability, a willingness to learn, and demonstrating that so that that when working in the future with this founder, that's something that can continue. What are other things that you look for, and just kind of good, kind of sound advice around finding that fit between a specific investor and VC with the founder?
So I really think just being able to see that you have a good communicative relationship, you're coachable, and what the key metrics are behind your business, and you've shown that you've iterated and you played with your metrics, and you've improved, and then that you also are really great at hiring. I think that is something that is really important, is that you'll be able to inspire, incite your team. And as the CEO and founder, that's really one of your main priorities, is inciting and inspiring investors, employees, your suppliers, your customers, and you being able to do that is really important. And then secondly, and sort of equally important, and I suppose we can talk about this in the wake of, Uber, sorry, not Uber, but well, Uber a little bit, but, WeWork, is really having a team that, is smart, but also has a very, very, or I should say, but also has a very high degree of integrity. And so I think that having that coachable person who understands that they're humble, they understand what their KPIs are, has a high degree of integrity, and can incite, inspire. And so having those be a trifecta and not be at odds with each other, meaning, they're not selling vaporware, even that they may be great salespeople. So having those all fit within one entrepreneur is really what I would look for.
All great insight. So thank you. And I love this question that someone asked, how you personally got over some hurdles with your own company. So I'd love to maybe end with that question.
Yeah, absolutely. So I think, learning to be coachable and learning to understand when to, when to pivot is important. And that's something that is hard to do when you really have, we were B2C, and then I realized that we had value in our data, and worked with Beanstalk to build a product recommendation engine, and having that insight to say, okay, where there's opportunity is actually not where you originally were looking. You need to be honest with yourself. And so that's the reason I think that really being intellectually honest with yourself is really important. And that's what I personally have understood.
I love that. That's one of my favorite themes that you brought up. Just intellectual honesty with yourself. I think is important as individuals, founders, investors, everyone. So I love that theme.
Yes.
Okay, well, so thank you so much, Lisa. You've been absolutely wonderful. You've offered so much great knowledge and insight, and the fact that you're doing it from a spa while you're at a conference is
well, I'm in a spa, and I love spas. So.
Yeah, well, I hope they give you some kind of free service and whatnot. And so a reminder to everybody that's tuning in, we will have this recording available in the WomanMade community, and we also have a few additional AMAs coming up over each week. Next week, we have an AMA with a PepsiCo employee, a wonderful woman named Tiana, who I have personally gotten to know, and she's phenomenal. And then after that, we have another one on October 17th. So just stay tuned and know that we have lots of great content coming for you. And just massive thanks again to you, Lisa. Really appreciate it. And we're going to do this again around customer success, because I know we've got a lot to talk about there.
Cool. Great.
All right. Well, thank you. Likewise. Thanks so much, everybody. Thank you, Lisa.
Okay. Bye, guys.
Bye. Take care.